And we have another one. Toronto Dominion Bank, TD, on the TSX, Toronto Stock Exchange. Secret Wars, man. When am I going to end this? I keep digging. You don't have to dig too far, man. And mostly I find stage 4s on the Toronto Stock Exchange. Finding stage 3s on the NASDAQ. Finding stage 3s and stage 4s on the New York Stock Exchange. There are stage 2s in there. You'd have to check my playlist on the Secret Wars playlist on the YouTube or on batcharts.com. There's a few there, and all these analysis, just like my classical monthly candle framework, they last a good time. Even here, it's on the weekly, and with stand system, you have entries on breakdowns, but you also have entries on pullbacks on low volume, and you have entries on continuation breakouts or breakdowns. So whatever analysis I did, you could dust it up. Patrick saw it, missed a stage 4 continuation, and then you could see if there's you could still enter the trade or later on or put on your radar. I just don't get it why people just follow one or two stocks and try to force positions on it. That for me is just reducing your chances of riding a good stage 2 or stage 4, and you'll just go by the feel of the day. You'll get that I got news, it's time, it went down 5 days in a row, it has to go up now. Like you're in a roulette land there on casino. So I don't get it. Look at a maximum of charts, maximum you can, and you'll have the burden of choice, and then you'll be able to down select the real A+++++++ setups. Really the best ones. All right. Toronto Dominion, what do we have? Okay, we had a nice stage 2 back in the days. I have 5 years, weekly candles. Look at that nice stage 2. Let's just take a look at it fast. Am I able to do that, or I always have to... because I like stand system. I like going through it. And the first time I did it back in 2007, I didn't do it this deep. I didn't ask that many questions. There weren't that many resources out. I have the Ichimoku Cloud. Thank you, stageanalysis.net. That's support. The green cloud. If the price action is on top, I know I'm in the uptrend. And if I'm playing a stage 2 breakout, I don't want any red above me. That'd be the resistance clouds. So I think this is the breakout candle. Right here. You see the volume right here for that candle. And I have the RSI going upwards territory. A plus, as Stan calls it, the triple confirmation. Add another plus because of the Ichimoku Cloud. You're on the good side of it. And that's 1 plus, 2 plus, and the third plus is using my monthly candle framework. And that's where I see it's fun being versatile. And I don't know, I'm coming up with the thoughts that you could have 2 different trading frameworks, 2 completely different. Keep using one framework for one time frame, whichever fits best, because I think Stans fits great with the weekly candles. And use maybe the monthly, a classical chart pattern, monthly framework for the higher candle. So you do that for the same for TD. I'd go look and I'd go see. Let's do it here. Let's go back like we'd be here back in the days. And I want to play stage 2 breakout. Remember, on the monthly charts, you don't draw the trend lines at the resistance and support. It's not the same place. This is the weekly breakout line. But you see, that weekly line is part of noise of certain candles. So on the monthly, You draw from the close or the opens. Here's the real breakout line for the monthly at 42.50 on the dot, not the 43 level that's on the weekly. And here is the support. So it's a lot tighter ranges on the weeklies, on the monthly charts, less noise. And you have probably closer target than on the weekly, but you're in the you start a little later if you compare it to the weekly in the breakout, and you start a little later than the daily, but you avoid all those possible whipsaws, all those false breakouts that could have happened. You avoid those, so you increase your chances of reaching your target. So it's all you see monthly candles as a big old dinosaurs, and they're really slow, but once they get going, they take one or two step, and they catch up to whoever's there, and they're hard to stop. They're in the trend, and they get to target. The weekly candle could be more like a lion, and it's harder to get a lion to get whipsawed, but you can get it dizzy by the gazelle can get it dizzy by going and zigzagging away from it. And the daily, then that's maybe just like a little rabbit there, just jumping all over the place. It could take 10 steps in the same direction, and it could take 5 back. You don't know where the hell it's going. So right now, if I look this on the monthly candle chart, even right here, if I want to take a little further resistance, and this resistance, it coincides also with the weekly. I had the monthly close above, so that's a breakout right there. You're on the good side of the trend. 30-week moving average going up. Look, on my classical trading framework, I use the RSI mainly for to see if there's divergence with the price action. I'm still on the fence if I'm going to keep that on my classical charting framework. I like having nothing but candles, even the 30-week moving average, or this is the 10 I have here. I should be able to get rid of it. It's really clear the trend, what it is on the monthly candles. Since there's no zigzags and there's no, and you play classical trading framework, you shouldn't really care about the 30-week moving average. Just a chart pattern exploding where it is. It's enough to tell. It's enough to tell the story. So I could eventually just flush out and I think I'll do that. Edit chart parameters and adios RSI. There you go. Oof. Okay, I didn't want all that. Click. Get rid of all that. So keep the monthly candle charts just for pure classical charting, and just make sure you're on the good side of a breakout. Because I got caught recently playing USD CAD on the Stan Weinstein. I had a nice stage 2 breakout. On the monthly, when I entered on the monthly, the candle had not closed and did not respect the close of the candle, and I reasoned myself into thinking that because the Stan was on its way, then the monthly close would be above the breakout line. And what happened is, no, the price action got sucked back up, and the price closed below the breakout line. So on the monthly, I would have never played it. And now I'm in a Stan Weinstein weekly, and I don't have the power of the trend on my side. I could have it eventually, but right now I'm in no man's land. It could just bounce off. And what happened is the price action went back down, and it was in the breakout. I got triggered out. Thank God for my NAV, my money management protocols. Didn't lost less than 1% on that trade. But the lesson was, make sure you have a valid framework, a framework you trust at the higher higher trend that you could apply to validate that the framework on the weekly that you're trying to apply, you're in the correct side. And that's all it is, man. You gotta put the chance on your side. A breakout, you want full steam ahead. You don't want to break out and then move 3, 4, or 5 candles laterally. It's supposed to break out and move up, and then correction, light volume, then move out again. So if the monthly trend is not, if you don't have a breakout on the monthly trend, or it's not in your favor, that could slow you down. All right, that was that for that. And here it is. So here we had the monthly, everything was in our favor. Eventually we had 1, 2, 3. We had our super duper trend line, and look at that. Take your profits almost at the top. Yo, the trend line's broken. Usually you're gonna get a sideways move, a reverse, or slow down. Then the other half remaining at the violation of the trend line. It's just like classical stand. Just awesome. And there you go. Nice stage 3. Ichimoku cloud, just playing around in it. And then stage 3 continued. You could have had, you see here, Ichimoku cloud. Let's look at this breakdown right here. Oh, is that a breakdown? Okay, you could have gone, no, here it is. Okay, this candle, if you would have drawn your trend line from here, this candle, no breakdown. From this candle here, you say, look, I'm below the cloud. I'm below 30-week moving average. And the volume's not twice as much as the previous 4 weeks. And this is where I cheat myself. It's just 10, 20% more. Look, Stan wants 100% more than the previous 4 weeks. So I don't think if you have less than 50 or 60% more, it's not super duper good. Did you have the RSI going down negative territory over the halfway point? Not negative, but over 50. It started going down. I think this is the point just for the next candle. So we had not an A++ setup, A setup, because we didn't have the super duper volume, and we could have went to the 10-year monthly candle chart. And what do we have here? Let's back up in time. And look at that. On the monthly, okay, we didn't have these candles, right? So I'm going to ignore. On the monthly, the real support was right here. So I would have never played a move here, classical chart move, unless I had a breakdown below 50 at this level. So that's a magic level. And if you would have entered here, you could have said, look, man, I'm in the pattern. I'm in that powerful monthly candle chart pattern. That's scary. You could start, look, 30-week average starting to go down. You could try to convince yourself that that's the way to do it, but you got to respect that ultra powerful support right there at the 50 line. See, it took me 5 seconds to check. Get a template ready for your monthly. Apply it to whatever chart you're at, and you'll save 1% of your NAV. 1%, 1%. Reduce the whipsaws. That's what I'm really concentrating on. My frameworks is always trying to find a way to reduce my whipsaws, to reduce those 1% losses that all traders say, well, sometimes I have a big runner, 8 to 1, and then the other 9 trades, they even themselves out. But what if you could reduce the number of trades that evens out? So you have sometimes those 8 to 1 runners, and then for 1 out of 10, it's the 8 to 1 runner, and then 7 out of 10, you get a 2 to 1 or 1 to 1 runners, and then you get only two that you lose 1% of your NAV. Doesn't that be better? Sometimes it's just taking the foot just off the accelerator, just reducing your greediness or your risk, that your reward, and just to make sure you stay in the green. With stand systems, it's pretty easy. Well, we never know what the reward is. We know the initial risk, and the reward is just how well you apply the system and how well the stage 2 it reacts. But on monthly candle charts, you always have a chance of putting closer targets, more probable possible targets to stay in the green. All right. And so that's it. We'd have not entered this breakdown. We'd have avoided this whipsaw right there. And we're golden right there. So we're still in stage 3. And the stage 2 right there. Look at that. Look at that. Is that volume? Oh, no, it's this candle here. That's this crazy volume right there. But if we would have entered, continuation breakout might have been right here. Look at these two candles starting to move up. That's the candles, or these two, pretty much more than double the previous 4 weeks, 5 weeks. So we got A plus set up. How about that RSI? Is it going over halfway territory? Well, it was just above halfway territory going up. Above the Ichimoku cloud. Above 30-week moving average. So we got A plus plus set up. Do we have a plus plus set up? Let's go look at the monthly and check it out. Yeah, on the monthly we're good. Let me just explode that. Whoa. Actually, you see again the monthly, this was noise on the weekly, but we had to, there were closing on the weekly that were in the wick, so we had to put that, that's where we put our breakout line. But on the monthly, this is the real pattern right there. So on the monthly, that candle was deep into the breakout. So that's a good sign for us that we're, and then you have the 3-week moving average going upwards, etc. But yeah, so we had we're already in the green for that. And if you would have really wanted for the candle close on the monthly chart, you could have just waited and got in when the monthly close finished. You knew you had a breakout on the Stan Weinstein and maybe the candle close, the actual candle close. Let's go see what days. This is, well, this is the candle close for the month. Yeah, the 28th, 29th of September, of August, and it closed on the 2nd of September. And okay, so that was like a double whammy. That was the best. Weekly close and monthly close, same candle breakout. You're good for the ages. And look at that. That's the ultimate. 1, 2, 3, and then when it's violated, you're almost close to the top. Then that's half of your position, and the other half would have been this pullback, and the price action goes back up. And that's what your profit would have been, your reward. You would have entered here. Here's your reward. In between half of those two, because half position there, taken off the table, half there. And that's what makes me consider, and I think I mentioned this in previous podcasts, Stan takes half the trendline violation, but honestly, most of the time there's trendline violation. Most of the time, you're almost close to the top, and then you have a sideways move. Like, I would really consider just taking everything off the table, and that would be the ultimate maximized profits right there. If you have a really strong trend line, 1, 2, 3 points really solid that hit it and then it gets violated, I would Take everything off. I'll still respect the book for now. I don't mind. It just averages out a little bit in case it continues back up. But that would have to happen more than half of the time for me to be worth my while, right? Or some math like that. I'll try to think of that clearly. All right, then it goes stage 3, another breakout. And here's where we are today. That was a valid breakout. Look at the candle. See this candle here? It comes over and over and over again. Twice the average volume of the previous 4 weeks. It's like Stan was a keen observer. Above 30 when we average. Above, there's no red cloud above. And let's just go see if the monthly candle. This is another candle. See, over the month, it's a closing candle of the month. Wow. What are the odds? What are the odds? 1 out of 4, right? Because there's 4 weeks in the month. Okay. And you see right there, that's our breakout candle. And off it goes. So we had a breakout also on the small pattern, 4-month pattern on the monthly candle chart. Okay. Let's get down to business. All right, here we are. Okay, now I've identified TD as a stage 3. I'm putting in my alerts at 76. So a close above 76 is a continuation of the stage 2, or finish stage 3 becoming stage 2 again. A close below 70, 71, let's say 70. It's we're going to stage 4, but not a stage 4 playable if we want an A++ setup, because we want to be below the Ichimoku cloud. So unless we have a close and we have a candle, let's say a closing candle that goes all the way and closes below the 67 level, and as time moves on, it'll have to close a little higher and higher because the Ichimoku cloud, this previous support is can be a little higher. Then we're not going to play it. I'm going to put an alert here at the Ichimoku cloud level. So that's my real breakout level for me, 68.50. And until it breaks down below that, I'm not going to touch it because it might just zigzag here, make a bigger pattern. No go. So that's where you set your alerts, on the bottom of the last support of the Ichimoku cloud. And that's about it for TD, guys. Look, it was a little good practice. Stage 2, stage 3, stage 3, stage 2, and always use some type of framework and just go look at the monthly chart, please. I'm saying it for myself out loud, like usual, for me to register my brain, but it's going to save me some whipsaws and increase my success ratio, guys. All right, I'm out of here. See ya.